Microsoft versus Apple stock comparison. That's what I'm taking a look at today. My name's Jeff Beers. This is the 40 Finance channel. Let's dig in. Microsoft and Apple are both top 3 stocks in terms of market capitalization. Amazon sneaks in there too. And the reason for this video is just to kind of take a look between both stocks from a value comparison and take a look at the numbers with the companies, the growth options, etc., and just see how comparable are they besides price alone. So that's what I'm going to look at. Microsoft's first on the list. It has a price of $101, a PE ratio of 41, and you can see over the past year Microsoft has grown about 10%, and that's with the recent downturn in the stock market from Christmas time into 2019. So it does have a dividend. As you can see here, dividend is 1.82%, pays approximately $1.84, and so that goes into the price calculation as well. Apple also has a dividend, so they'll be comparable in that sense. All right, so next up is Apple. Street price of $147 right now. P ratio of 12 compared to the 40 plus that Microsoft had. Over the past year, Apple was doing well, and then around Christmas time and here in January, they got sucked pretty hard for concerns that their iPhone sales weren't growing. So they decreased substantially from their highs that look like we're in the neighborhood of $225 per share. So they're sort of on the downturn. Microsoft's sort of holding water. With Apple, you get a dividend of 1.87%, which pays $2.92. So we'll compare those dividend numbers a little bit further down. But what you have with Apple is a consumer goods stock, more or less, than Microsoft, which is kind of a technology stock, even though that Microsoft has obviously Microsoft Office, they have Xbox, they make computers, Microsoft Surface, etc. But Microsoft also has cloud hosting, that similar to Amazon's AWS. They have a lot of other enterprise level tools that they sell for big business. And so that's really kind of the distinction from Apple being just like a straight consumer goods and services compared to Microsoft, which has consumer goods and services, but the bulk of their money comes from the enterprise level. Okay, so now we'll flip to projections. And with Microsoft, I took this from the TipRank service I use, which basically looks at the top performing analysts who follow Microsoft. And right now, Microsoft has a strong buy rating across 18 of the best performing analysts. You see over here that the high side is 140, average is 124, and the low is 75, which usually the high and the low you just throw out unless somebody has a special case for that. So right now, the street has Microsoft trending up and pegged as a strong buy stock, obviously encouraging you to, if you're making decisions between stocks, certainly between Apple and Microsoft, you would consider that Microsoft is rated a strong buy. Next on the board is Apple, who you see here has a moderate buy. Between the 30 best performing analysts that actually follow Apple, you've got a high of 260, the average is 179, and the low is 140. Now, the difference between moderate buy and buy is represented over here by the breakdown of the 30 analysts. You have 15 who are saying buy, and you have 15 that are saying hold. So if hold being, if you already own the stock, just put it away and wait. This isn't the time to sell. This isn't the time to buy more, if that makes sense. So compared to Microsoft, Apple is actually considered less of a strong buy, if you will. You have 15 people, in fact, who say do nothing right now, and let's see where this thing goes. So between the two, Microsoft is the higher rated stock, if you will, than Apple. Now let's take a look at the fundamentals of the businesses. So here's a chart that compares a couple segments of each business. Microsoft is this column, Apple's this column. Hopefully these numbers show up. From a profitability standpoint, Microsoft net income is $16.5 billion. Apple's is $59.5 billion. So Apple wins that category. Earnings per share, Microsoft $3.88. Apple $11.91. Apple wins earnings per share. Trailing PE ratio, Microsoft 26, Apple at 12. Apple wins again because lower PE ratio is considered better. Forward PE ratio, Microsoft 20, Apple 10. Apple strikes again. PE growth, Microsoft has $1.84. Apple has $1.38. So this is where Microsoft gets its first point, if you will, in our tab. Net margins, Microsoft makes about 16% profit on the goods that they sell. Apple is at 22%. So they make more profit per sale is what you can insinuate from this. Return on equity, Microsoft gets a 39% return on their equity. Apple gets 48%, which is very good. Return on assets, 12% to 15%, so Apple keeps that. On the dividend side, the dividend yield for Microsoft is 1.81%. Apple is 1.97%. So Apple, slight gain in the dividend yield, although both of them are under 2%, and they're very close to each other, but Apple is providing more. So at the end of the day, when you stack Microsoft versus Apple, the fundamentals of the Apple story are much more intriguing as far as value per stock that you purchase. And even though that Microsoft is right now the strong buy, we have to ask ourselves, why isn't Apple in that same category when it wins fundamentally across all notable revenue columns? And the key here, I think, is this. This is a new sentiment calculator from TipRanks. And you see right here, strong negative. So I realize this is just a widget, but it basically calculates all the articles and headlines that are written by Apple across the board. We know for sure that Apple's had a decline in price. They've shorted their estimates a little bit. So it all builds up into a negative news sentiment. And for a value investor / long-term investor like myself, news in the short term is not really a concern of mine. Okay, so assuming that we're not saying Apple is closing up business and every iPhone is catching on fire and they'll never sell another one, periods like this are just a time to buy more. But the point of this presentation is both companies are really good, but I really worry about folks who are on the internet and they know they want one of these companies and they're looking in the media. And if you go back, you're going to see strong buy for Microsoft. And on the Apple side, you're going to see sort of a whole don't buy sentiment. And I think that what I'm trying to illustrate here is there's a lot more to the picture, okay? Particularly from a financial standpoint. Both of these companies are good, but you have to be careful about the snowball effect of bad news, if you will, and how it influences your decision to buy stocks. This is an example where I probably would choose Apple almost exclusively because it's down, okay? Because it's at such a cheap price right now. They are going to have growth problems in the near future. That's already been stated. There's already concerns about their units selling in China. I think Microsoft wins the growth story between these two behemoths, but it's not going to be by a huge margin. Microsoft's so big that outside of inventing something completely new, they're not going to have a gigantic earnings increase, right? They're so big, they make so much money that they're going to be lucky to move the needle 3 to 5% next year. Apple might remain flat. They might dip per year. The catch there, though, is it's a dip from higher times, okay? Apple is not going to wake up and be unprofitable, but it's the growth of earnings that gets so much attention. We know that one day, maybe it's 2 years from now, maybe it's 3 years from now, Apple comes out with the next super shiny phone. They're obviously going to be working hard on it now with this negative sentiment going on, and this stock will shoot right through the moon, and they've already got a base of customers. So think about the opportunity, think about the financial track record, take a look at more numbers than people's recommendations, make your own decision according to your goals. That's really what I was trying to accomplish with this video. Hope it makes sense. Please hit the like button if you enjoyed this and subscribe to the channel. My name's Jeff Beers. This is 40 Finance Channel. We'll see you on the next one.